and welcome. Have you ever looked at a piece of land and wondered, how on earth do they decide what that's worth? Well, you might be surprised to learn it's not just a guessing game, it's actually a science. Today, we're going to pull back the curtain and unlock the entire process behind land valuation right here in Nepal. So let's set the scene. Imagine you found it, the perfect plot of land. It's everything you've ever wanted. But here's the catch. To get that bank loan, you need to know its true value. So how exactly is that final number decided? We're going to tackle this like a detective story, following all the clues step by step to uncover how that valuation is made. So what's our game plan? First, we'll gather the clues. That's the all-important paper trail. Then we're heading to the scene to do some surveying and measuring. After that, we'll connect all the dots and do the math to calculate the final value. And finally, we'll look at the final report covering the best practices and, just as importantly, the pitfalls to avoid. All right, let's dive right in with Section 1. Every good investigation starts with gathering the evidence. And when it comes to land valuation, that evidence is a stack of official documents. These are the absolute foundational clues you just can't do without. First up, and you could say this is the most critical piece of evidence of all, is the Lalpurja. This is the official land ownership certificate. Think of it as the golden ticket. It's the one document that provides undeniable proof of who actually owns the property. Without this, your investigation is over before it even begins. Next, we've got the Napi Naksha. This is the official cadastral map. If the Lalpurja tells us who owns it, this map is like the blueprint of the crime scene. It's a 2-scale map straight from the survey office that shows the plot's exact shape, its official boundaries, and where it sits in relation to everything around it. And to really nail down the location, we have the Char Killa. This document is kind of like taking witness statements from the neighbors. It officially lists what's on all 4 sides of the property, east, west, north, and south, confirming our plot's exact position in the world. No arguments. So let's recap our case files so far. We've got the Lalpurja to prove ownership, the Napi Naksha to act as our map, the owner's citizenship to verify their identity, a tax clearance certificate to make sure all dues are paid, and the Char Killa to lock in the boundaries. Put them all together and you have the complete paper trail. Okay, with all our paperwork in order, it's time for Section 2. Any good detective knows you can't solve a case just by sitting behind a desk. You've got to get out there and visit the scene. And for us, that means getting our boots on the ground and physically measuring the land. Now, here's something you really need to know. In Nepal, there are 2 main systems for measuring land. Down in the southern plains, you're mostly going to hear about the Bigha system, which breaks down into Bigha, Kattha, and Dhur. But up in the hilly regions, it's all about the Ropani system, using Ropani, Aana, and Paisa. Knowing which system you're working with is absolutely crucial for getting the numbers right. Let's be real, land plots are rarely perfect squares. So how do you measure some weird, irregular shape? Well, this is where modern tech comes in. Valuators use software like AutoCAD to trace the plot directly from the cadastral map. This lets them break down any shape into a bunch of simple triangles and polygons that can be measured with incredible precision. Pretty cool, right? So how does this digital magic actually happen? It's a pretty slick workflow. A valuator sets their units, pulls in the map as a reference, and then carefully traces the plot's boundary. Then, with just a simple command, the software instantly calculates the area in square feet. The final step is to convert that into local units like Dhur or Aana. It's a perfect blend of old-school maps and new-school tech. But, and this is a huge but, for all this amazing technology, there's one rule you can never, ever break. A physical site visit is not optional. It is mandatory. Maps can be old, a road might have been widened, or maybe a neighbor built a new wall. At the end of the day, what the valuator sees and measures with their own 2 eyes in the field always trumps what's on paper. All right, now for the part you've probably been waiting for. This is where it all comes together. In Section 3, we're taking all of our clues, the documents, the maps, the field measurements, and we're finally going to connect the dots to calculate the actual final monetary value of the land. The magic number we're hunting for is called the fair market value, or FMV. Now, this isn't just the price your neighbor sold their land for. Nope. It's a carefully calculated value that strikes a balance between 2 different numbers, the going commercial market rate and the official government set rate, which is known as the Malpot rate. So, how do they actually strike that balance? Let's walk through this example for a 30-door plot. The commercial rate, what it might sell for on the open market, is, say, 6 million rupees. But the official government rate is way lower, only 777,000. So here's the formula. You take 70% of that big commercial value and add it to 30% of the government value. And boom, that gives us our adjusted value of just over 4.4 million rupees. But hold on, we're not quite done yet. There's one more number to consider. Banks always have to think about risk. What happens if they need to sell the property quickly to get their loan back? For that scenario, they calculate something called a distress value. It's usually about 90% of the adjusted value, a more conservative, cautious number that gives them a safety cushion. You know, seeing it laid out in a chart like this really makes it click. Way up top, you've got that high commercial value. In the middle, you see our blended adjusted value. And then at the bottom is the most conservative figure of them all, the distress value. That's the number the bank is most likely going to use when deciding on your loan. We've cracked the case of how the value is calculated, but our investigation isn't quite over. For our final section, we're going to look at what separates a trustworthy valuation report from a flimsy one. We'll explore the best practices and the common pitfalls that everyone should watch out for. So where can this whole process go wrong? Well, there are a few classic mistakes. A valuator might just rely on the maps and skip that all-important field visit. They might be tempted to use the largest possible area measurement instead of the most conservative one. Or, even worse, they could ignore big red flags like high-tension power lines or a flooding risk from a nearby river. All of these errors can make a report totally unreliable. So what are the golden rules here? What does this all boil down to? A truly solid valuation is always built on a few core principles. You have to have that complete documentation. That physical field survey is absolutely non-negotiable. You always take the most conservative measurement to be safe. You stick to the standard, objective formulas, and most importantly, the valuator's professional judgment has to be 100% unbiased. So there you have it. We've uncovered the science behind how a simple piece of land gets its price. It's a meticulous journey of gathering evidence, surveying the scene, and applying clear, objective formulas. But that leaves us with one final, fascinating question to chew on. Now that you know the science, what about all those unseen factors? Things like a planned new highway, sudden zoning changes, or future development plans that could literally change a property's value overnight. That's definitely something to think about.